Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Wednesday, second day of October 2019, and this is the daily report for gold and silver. A tremendous follow-through sell-off in U.S. equities, with the Dow Jones Industrial Average plunging about 500 points before slightly recovering, but closing very, very near that particular price point. At the same time, we had stellar performances in gold and silver, platinum, and palladium. Of course, we'll cover that in detail when we look at our charts. The key to today's move in gold is twofold. If you recall from yesterday's show, we talked about two factors that I really needed to see before I could say with some confidence that this correction had concluded. The first thing was a move back above that key psychological level of $1,500 an ounce, and secondly, a move back above the 50-day moving average. Both things occurred today, and that is one of the major reasons that prompted a trigger of a buy signal. We'll cover that in detail as we look at our charts, but first, let's take a look at current pricing. Traders' concern about a slowing economy, and that is globally, is what prompted the pressure we saw today in U.S. equities. We're looking at the Dow Jones Industrial Average. That closed off by 494 points, almost a 2% drop. One interesting facet of the chart when we look at it, and this of course is a daily chart, is this tremendous gap between yesterday's pricing and today, in which it closed yesterday just above the 50-day moving average and then opened and quickly traded below the 100-day moving average. That to me is fairly significant. Of course, the precious metals fared extremely well. Gold is currently trading at $1505.50. That's up 1.11%, a net change of $16.50. We did initiate a long trade. We are in at 1506. Oddly enough, the price that we got in on our last trade. We have a stop below that, and we'll cover both of those numbers in detail when we pull up our technical studies. When we look at spot gold, that actually had a more stellar performance in terms of percentage gains and numbers, up 1.37%, a gain of $20.30, just below 1,500 at 1599.40. Silver also tracked higher today, up about 1.75% at 1760, and that all in light of a fairly neutral U.S. dollar. Dollar actually moving 0.62%. Very, very small move in the dollar index today. Now, what fascinated me the most about gold was the fact that it broke above 1,500 and it broke above the 50-day moving average. Let's take a look at that as we pull up our charts. We are looking at a daily candlestick chart, this of December gold, and there are a couple of things that we really want to take a close look at. We kind of alluded to them in the beginning of the show when we talked about a couple of factors, mitigating factors, that really caused me to consider issuing a buy signal. And it has to do really with the last 3 days of trading, starting with this red candle here, yesterday's decline, which was the lowest trading point ever since the correction that began at, call it 1565 began. I believe that that is the low that we'll see. And what we talked about yesterday, that in terms of a 2-day pattern, we could easily identify a bullish harami. A bullish harami is simply an inside trading day in which you get, after a defined downtrend, and we certainly met that criteria, you get a large red candle, and then the following day you get a small bodied candle that should be approximately in the center of the red candle, a lower high, and the low can be below the low of the prior candle, because what we're really looking at more than anything else is the actual body-to-body placement. So that would simply be this red rectangle versus the green rectangle. I also said to take this as an actual call, we must have a confirming candle. And a confirming candle for a bullish reversal pattern is always going to be a long green candle with a higher high and a higher low. So we achieved that, and that was a very, very strong motivating factor. First, we definitely traded back above $1,500. key psychological level. But more importantly, we traded and closed above the 50-day moving average. Now, although we only dipped below it 2 days ago, that is a significant level in terms of where we look to determine whether or not a market is in a short-term bullish trend. Of course, below that is the 100 and 200. 200 gives us an indication of the long-term trend. Based on that, we entered the market. Traders taking the call. We're in roughly at 1506, and we placed our stop just below today's low. It didn't make any sense to put it any tighter than that. You can see right here, we're looking at 1480. And I believe that we placed our stop at 1478 and change, so a couple dollars below today's low price that we hit. In terms of our upside target and exit strategy, that is something we will begin to talk about tomorrow as well as Friday, assuming that the market moves in our perceived direction, which I certainly believe it will. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.